You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. Welcome back to Options Bootcamp for the second episode here of the mad new trading year of 2023. What's in store for us? We're all going to find out together. Should be interesting journey this year. My name, of course, Mark Longo from theoptionsinsider.com. Enjoying celebrating our 16th anniversary here, not a boot camp, but of the network as a whole. It was born back in the primordial ooze of January 2007. That's when we launched it. We were building it, obviously, before then. Pre-iPhone, really when anyone knew what the hell a podcast was outside of tech-savvy folks. So it was intriguing times to be launching a podcast, but C'est La Vie kind of kicked off this whole options podcast genre. And here we are 16 years later, bigger, better, hopefully more fun, more engaging than ever before, judging by the numbers of you folks joining the network and listening to Bootcamp. You folks clearly agree. We do appreciate all of you who helped make 2022 the busiest year in the history of the network. Also the most expensive year for our bandwidth. Keep driving those bills up. First world problem to have out there. Of course, if you like what you hear, all we ask is you do keep rating and reviewing, just like this week's 5-star reviewer did. We realized we've been going for so long, over a decade on the show. We never really took the time back in the day to thank all of our many people who took the time to rate and review us. So we're going to do that now, just like Alan TPA did way back in March of 2014. Thank you, Alan. He said 5 stars. A very educational, great show, very educational and easy to understand. Keep up the good work. Well, thank you, Alan TPA, and everyone else who's taken the time out of their busy day to not just listen, but to rate and review it on your platform of choice. It clearly does help all the new folks continue to discover the show, and then they immediately go to Options Bootcamp #1, which makes it our #1 episode of the year for the last 2 years running here on Options Bootcamp, which is impressive in and of itself. And you know who's also impressive sometimes? Sometimes he leaves me hanging. He's the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. How's that for damning you with faint praise, sir? Mr. P, welcome back to the show.
Hey, Mark. It is great to be back on the show. We've got great stuff to talk about today, I think, don't we?
I think we do, and I'm just joking. Always impressive, sir, especially for your question of the week. So let's get to it.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call while Dan gets ready to unleash his question of the week upon us. I'll really quickly pay off our question of the week from last week that just ended, so it kind of dovetailed into this week as well, because we also kicked things off with our VIX question of the week to kick off the year. We have a couple of questions we like to ask you guys at the beginning of the year. One is, where do you think VIX is going to close? We already revealed that on the episode last week, but also we always ask you guys at the beginning of the year, a bit of a sentiment poll out there. We say, if you had to buy a 10% out of the money call on one of the following markets/products out there that expires at the end of the year, which one would you choose? Gave you 4 different segments to choose from. SPY, SPX, so kind of your broad equities. Bitcoin, so your crypto. WTI, so your commodity segment. And, of course, VIX itself out there. Mr. Dan, no cheating. Which segment do you think our audience went with at the end?
Would I ever cheat, Mark? I mean,
never. You know. We don't call you the black-hatted one for nothing, though. I'm just putting it out.
Oh boy, like this is like, what do I want to order off the Arby's menu?
Arby's is tasty and delicious. I don't know what you're talking about.
Well, maybe they're curly fries, and the Arby's sauce isn't too bad.
Actually, the sauce is pretty darn good. I could go for the sauce.
yeah, I could go for the sauce. Oh, geez Louise. I mean, yeah, we talked a little bit about this last week. Crude's sort of the wild card. I guess if I have to go with one of these redheaded stepchildren, it would probably be the S&P 500.
The redheaded stepchild poll. Looks like a lot of folks followed your lead. They kind of held their nose and picked the S&P as well. 43.3% choosing that. Kind of have to pull up the numbers from last year's, but it was a kind of along a similar lines. You folks are actually, I think, if anything, more bearish, or more bullish, I should say, somewhere around 46%, I think. We're choosing the S&P. Of course, we all know how that worked out last year. But this year, we had a weird tie for second place, 24.4% exactly, with between WTI and VIX, so between vol and crude oil. And then bring up the rear, Dan, the worst of the redheaded stepchildren, Bitcoin. No love for Bitcoin, sir. Even though you can maybe argue it has been beaten down, so it might be one of the easier ones to make that 10% pop. But just percentage-wise, you can get it out of Bitcoin easier. But no, nobody wants Bitcoin out there. You agree with that? Disagree, listeners? Hopefully, if you agree, disagree, you guys were active over there at Options, making your voice heard last week. We'll have a new question of the week coming out soon, but we always have to kick things off with our annual sentiment polls out there. Mr. Dan, while we're kicking off the year with our sentiment questions and polls, what are the folks over there in NTM? What questions are they kicking the year off with, sir?
Well, Mark, this is the time of year when people start talking about earnings trading. And man, like the one thing that I get, I'm just sort of making a composite character out of all the people who ask me questions about earnings. And, it basically goes, Dan, I've been trying to trade earnings and, I just can't make it work. I'll get lucky every now and then, but I'll buy calls and I'll be right and I'll still lose money. What's going on? Is there possibly a way to trade earnings? And the answer is yes, but you have to do it much differently than you typically do. Buying calls or puts going into earnings is what you might call a fool's errand. It's never going to work in the long run. You might squeeze something out here or there, but the implied volatility gets so jacked, especially in the front expirations, that it's impossible to make money in the long run. So, we have a very specific system that we've talked about, I think, in the past on this show, total earnings domination, which we actually have an online training coming up tomorrow and Saturday. And anybody who is on our list who, clicks the join free button on our website, you'll get an email invite to it. So, you ought to do that today. Do it right now, as a matter of fact, so that you can get the invitation for tomorrow. Because trading earnings is a very, very, very specific thing. And it can be done, but, you have to do it right.
It is that time of year again, listeners. We are just getting in a new, fresh batch of earnings data from our friends over there at Oratz. We'll break all that down tomorrow on the Option Block Show. If you want to check it out for yourselves, as always, head on over to theoptionsinsider.com. Click on the Options News and Articles tab. Because we like you folks, we give you that data all the time, pretty much completely for free. So you get 4 reports. You get the earnings move reports, what everything is pricing in, how that compares to how they performed historically. Very valuable data in and of itself. And until we started giving that stuff out, really wasn't freely available anywhere. You can go find an old Goldman study from about a decade ago. But that was about it. You had to go pay for research, some of the big houses, to really find it. And it's important data. How do these names perform compared to their strata? Very basic, but very meaningful analysis. Then we have the earnings move results, which is immediately after the announcement. How do these names perform? How much vol really comes out? That's what we try to measure. And then, of course, the earnings season, breaking it down by week. And then, of course, the ever popular earnings trades reports, where we actually put on and monitor trades, mostly long calendars and long straddles. You could see exactly what we entered, when we exited, how it performed, and why we did those all there as well. So all sorts of fun there. 4 reports for free because we like you folks over there. TheOptionsInsider.com is the place to go. Let's keep on going. Speaking of stuff you folks liked, you guys liked the breakdown we gave you last week on our first show of the year for Google Trends data, including Ants with a Z. He wrote in saying, hey guys, what about the trends data for selling puts? How is that looking coming into the new year? And happy 2023 to OBC. Well, thank you. Happy New Year to you as well. And to all of our new listeners, and new and old. We love you all out there. Welcome back to the show here for a new year. And yeah, asking you shall receive, Dan. So we went out for Ants and anyone else who was curious. And we tried to run some numbers for selling puts. Now, obviously, selling puts, it can come a variety of different ways. There are a variety of different search terms you could use to try to find that. So we went with the most basic one first, Dan, which is the old short put. And we ran the numbers for that. And short puts, I don't know how people are actually out there typing in short put into their Google machine, but enough to run some data on here. And unlike some of the other charts we ran, there aren't multiple zeros, which shows there isn't a lot of data. So there's enough data here to crunch some numbers on. And the high for the year in terms of interest, remember Google Trends runs from 0 to 100 listeners. The high over the past year for interest in short puts came the week of April 24th to 30th. We had a second almost high as well. That was the week of December 11th to 17th. It hit a 94. So almost got back up to 100. And the low, kind of, they flirted with it back in midsummer around July, and they've actually hit it now of 58, which is kind of the seasonally adjusted low. Again, we are just kicking off the new year. I expect a lot of these numbers to rebound. So that's short put. Then we thought, let's get more specific, see if there's any data on that. We ran short put option. And again, getting more specific, you are reducing the amount of data you can access, as witnessed by this graph. It bounces off 0 a bunch of times. So there were just days that there was really no search interest in this. But such as it is, the limited data we have, the interest in the short put option, that peaked on October 9th to 15th, and the low came multiple times over the year, which again is kind of an indicator that, you know what, there aren't a lot of people out there really, really searching for short put options. By the way, I forgot to mention the top 5 states that were interested in short puts over the course of the past year. So let's just break it down really quickly. Florida, number 5, that's been popping up on all of our search terms. Florida is usually number 4 or something like that. So Florida really blowing the doors off for options interest this year. Number 4, Pennsylvania. Number 3, Illinois. I wonder why. Number 2, Colorado. Dan, didn't you spend some time in Colorado? Maybe that's why these are per capita numbers. Maybe you showed up and you just drove the options search interest in Colorado off. I don't know how the hell Colorado got to be number 2. And then number 1, Massachusetts. Who's looking for short puts in Massachusetts? Apparently everybody, Dan.
Wow, that's interesting. I would have never guessed. Yeah, I do spend a fair amount of time in Colorado, but interesting.
So Dan is to blame for Colorado. I don't know what's to blame for Massachusetts. I know the Fidelity guys are out there. Maybe they're driving a lot of that. By the way, short put options, getting a little bit further down the rabbit hole. We mentioned the highs and lows. The top states for that, again, Florida, number 5. Florida's like a fixture in all these. Very strange. Number 4, Texas. Number 3, California. Number 2, New York. Number 1, New Jersey. So intriguing there. That's for short put options. But you know what? We'll get even more granular here for our buddy. Who was it? Ants with a Z. Because again, a lot of different ways you can carve up this onion here. Let's go to put spreads. Who's intrigued by put spreads this past year? That also hit double highs this past year. Similar weeks to what we were just talking about. The 2 highs, both of them hit 100, so it pinned the needle twice, which is rare, on the week of April 24th to 30th. And again, that same week for short puts, the week of December 11th to 17th. So 2 highs in the chart. Don't see that too often. The low came at 41. That was at the end of the year last year, December 25th to 31st. And the right now is trading at about a 55, or hovering at about a 55. Interest in put spreads going up a little bit to kick off the new year. Probably not surprising given the overall concerns about the market valuation right now. Top 5 states or sub-regions, as Google puts them, interested in put spreads this past year. Mississippi, number 5. That's a weird one. Number 4, Connecticut, my old stomping grounds. Number 3, Louisiana. Number 2, Oklahoma. Number 1, Alabama. Dan, any surprises for you so far? I'm surprised by who's interested in put spreads, that's for sure. But Mississippi, loving the put spreads, and Oklahoma. But any of this data coming as a surprise to you so far?
Yeah, a lot of it, because, I spend a fair amount of time looking at demographics of, who trades options, and, it's sort of what I do, so it's pretty surprising that we see those regions. And I'm wondering, I'm just looking at it now. I just Googled, it just put spread, right? I just Googled it, and it is all, option trading stuff. Cause, sometimes like somebody will look, we talked about this last week, you'll Google options, and like, options for hair replacement, comes up. It's like, options is a very broad word that transcends just what we do. So, but yeah, I guess put spread is a put spread. That's it.
Yeah, not many other use cases for put spread. Maybe you could put some spread on your toast, and someone's researching how to do that. I don't know. They're very confused how to spread the jam on their toast. But outside of those limited scenarios, yeah, I think put spread is put spread. We'll get a couple more because this is just kind of just a fascinating rabbit hole to go down, Dan. Let's go down. I blame ants for kicking us off on this journey. Let's go to put credit spread. Get even more specific. Usually selling a put credit spread. So that's another way we can look at selling put interest. And put credit spread, again, doesn't seem like the most popular search term. It hit 0 a few times on this graph. The high came the week of October 30th to November 5th. So kind of a bit of an outlier to the rest of the data, would seem to peak in April or in December, or sometimes both. So October 30th to November 5th, maybe again, this data kind of light. And again, it hit a low of 0 multiple times during the year. Good sign, though, we have bounced off the low now. We're closing in on a 50 right now. So roughly half of the interest that was there back in October 30th to November 5th. And then, Dan, we dialed it back. Let's just say, okay, put options. Forget about put spreads or anything. Let's just go put options themselves. Forget about selling any direction. Let's just look at put options interest. And that gave us some interesting data. The high for the year was actually close to a year ago, Dan, Jan 23rd to 29th. So right as we were coming into last year, we were coming in hot, VIX was at the low for the year, but it started to rise. Vol of vol was over triple digits. And the markets were at their high for the year, and they were kind of teetering on the edge of the precipice. And of course, later in January, we started to fall, and things just got worse with the invasion and all sorts of fun. But the week of January 23rd to 29th was the apex for interest in put options last year. And again, if you look at the broad chart of the S&P, it might make some sense why they topped out there. The low came at 45, so right around half of the level of interest at the beginning of the year. That came twice last year, July 3rd to 9th. So again, midsummer, not usually a rocking time for options interest. And also right now. So again, also lining up seasonally, the end of the year, beginning of the new year, also not seasonally strong times usually for options interest. Oh, and by the way, the number one sub-regions for interest in put options. Number 5, Massachusetts. So Massachusetts back on the list. Number 4, Connecticut. So Southern New England getting a good representation there for interest in put options. Number 3, Kansas. All over the place. Number 2, Nebraska. And number 1, Illinois. Yeah, I don't know what to make of. The data makes sense. The sub-regions, I'm still having a hard time coming to grips with, Dan. Anything surprising you here on our put options or put credit spread data, Dan?
Yeah, number 2, Nebraska. I didn't know there were more than 92 people in Nebraska.
All of them searched once, and they got to the number 2 spot.
Yeah, do cows have thumbs now? They're like Googling on their
Wow, slamming all of our listeners from Nebraska. Send your hate mail, Dan@markettaker.com.
You mean both of our listeners from Nebraska?
Hey, huge. Number 2 for put options. We talk about put options. Those shows do huge in Nebraska. I'm just saying. All right, listener. So yeah, blame ants for that a fun rabbit hole to go down, though. We could do this for days with some of the Google Trends data. It is kind of fun and interesting stuff. Sometimes it lines up with expectations, sometimes not. But intriguing stuff. Is there a search term you're curious about? Hit us up, let us know. And it's always fun to explore this stuff as we keep on rolling with the questions you folks have top of mind to kick off this new year. Let's go to DJ. DJ says, what made Dan so interested in VXX, and does he still trade it? Dan, when we were talking about our kind of trends and takeaways from last year, one of the ones you pointed out was just the debacle that became VXX towards the middle of the year when Barclays kind of washed their hands of it, and it was just a weird, uncoupled beast. So DJ wants to know, what made you so interested in VXX to begin with? And then B, do you still trade it?
Well, I mean, there's a bit of a long history here. When CBOE first came out with VIX, there was me and a few other people from the options industry that they called in to, say, hey, what do you think of the VIX product? Do you think how we structured it makes sense, and blah, 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 blah. And my initial thought on it was, well, no, I mean, it's weird that the expiration is the future price of VIX 30 days from now. And, why can't the underlying be the VIX? And obviously there are some reasons for that, but I wasn't a fan of that. And then when VXX came out, I was like, wow, this is even more convoluted than VIX. And at first I didn't really like it because it was so convoluted. And then one day I just kind of realized, wait a minute. When it comes to trading, the more disconnected and convoluted something is, the better it is to trade, because fewer people understand it and there's more nuances that you can capitalize on. And so, I ended up jumping in and trading it just because it is so nuanced. But then when it decoupled, like Mark was just alluding to, when Barclays, washed its hands of it, I just lost interest and I never looked back on it. That was the most attractive thing about it, is how it was sort of illogical in a lot of ways and didn't make sense. But once you understood the nuances, it was a nice little trade, and just never looked back, man.
Yeah, I don't blame you. I kind of washed my hands of it as well. I think it's still, now that it's kind of back in somewhat functioning form, and we've kind of debated this on vol views as well, it might still have some utility for people as just an indicator for what's going on with the slope of the term structure out there. Maybe if you're not as savvy with vol futures and you don't want to watch the surface, then VXX can kind of provide you a bit of insight into what's going on, contango, backwardation, all that kind of stuff. So it has some utility, I think, for that. But I'm with you there. I don't trust it. Fool me once, shame on me. Fool me twice, shame on you, right? And then they've been fool me however many times now. So yeah, if you're putting a lot of your eggs in the VXX basket and you've seen what happened, it's like TVIX, right? Remember when TVIX just imploded, Dan, went crazy? Like it was a while ago. After that, I can never really trust it again. And it traded for a long time, just got delisted again a few years ago. And a lot of people flocked to it. It did a lot of underlying volume. There were no options on it. Obviously, another reason why it wasn't that interesting. But TVIX, once it kind of went nuts, I lost all faith in it. And it wasn't anything to do with the vol, what was going on in the vol market. It was the mechanics, the fund flows of the product itself. Remember, these are all Franken products at the end of the day. I said this a million times on the network. These are all obtuse constructions attempting to replicate something else. And things can always go wrong. They can go haywire with them. And when they do, when you see the underpinnings of these Franken products start to unravel, that's a good time to get the heck out of Dodge and be very leery, very reticent to get back in. I'm not saying you can't take a flyer on some VXX puts every now and then, something like that. If you feel the inclination, have at it. But for me, I think my days of slinging a lot of VXX are mostly done. Let's go out to the live. Our folks are hotly debating what's going on out there with WWE, the stock. Yeah, the WWE stock was, and this will probably be a good discussion for tomorrow for the option blocks. I know those guys, we have the 80s wrestling guessing game. They love themselves some old school WWE. Talk about highs to lows for me for WWE just over the span of the last 24 hours because we gave away that Sergeant Slaughter figure for the winner of the 80s wrestling guessing game on Monday. And Dan, I don't know if you are an old school 80s wrestling fan, but I think I had the apex of my professional career come on Monday when we gave that figure away, and none other than Sergeant Slaughter himself got wind of it and liked it and retweeted it on Twitter. So that made my day. One of my childhood icons following us now on Twitter. So I don't care everything else we've done, Dan, 16 plus years of the network, flushed it all down the drain. Sergeant Slaughter likes us and follows us on Twitter now. So I think I have succeeded as a man. What do you think?
That's really great, Mark. I'm very proud of you.
See, you're not an old school wrestling fan. If I said this to like Two Sauce or Ashland, they'd be losing their minds right now. And they were when they saw that, by the way. They were freaking out. But that said, but then, of course, as you mentioned, the drama with the stock. The stock was one of the best performers of the year. Everything else was getting annihilated last year. And WWE kept rallying, including after they got rid of Vince, they kicked Vince to the curb, all his issues. The stock shot up even more, arguably better than it was ever been. The live gates went up. The ratings went through the roof. People were loving the new era of the Vinceless WWE. Talent was flocking back to the company. It was like a golden age again. And then he just forces his way back in. His own daughter and son-in-law on the board vote unanimously to keep him off the company. He forces his way back in, kicks his daughter to the curb. She's done. And now the rumors are he's forced a bunch of his cronies onto the board. And even though he still has pending SEC and U.S. attorney investigations against, I'm not sure how you could be an executive of a public company with pending SEC investigations. But hey, I digress. And now the rumor is he's going to dump the whole thing to the Saudis. So he'll get paid, but it probably will be the just absolute undoing of anything you like. I mean, look at this, the golf league they tried to start. No one will touch that with a 10-foot pole. So this company's going to go from making billions in rights for their content every year, TV rights, to maybe having to buy time to put this up on the air. So talk about just destroying your own baby just to maybe, if I can't have it, no one else will. He's going to get paid. He'll be all right. But just crazy drama. It looks like the stock was selling off today. It got down even more. It got down, looks like a couple of bucks here. And now it's kind of only down about 3/4. Again, the story of WWE stock has been just ridiculous. I was leery to sell puts back in the beginning of the pandemic when it was about to threaten 30 because there were rumors they were going to cancel WrestleMania. I thought, well, that's it for this stock. That's their bread and butter. This thing's going to hit 15. I'm not going to sell these 30 puts. And the thing turned right around after they announced they were going to make WrestleMania, whatever it was, a digital kind of thing, a no crowd thing. And the stock's never looked back. It's trading $90 now. So yeah, crazy town. The resilience of this stock in spite of all the madness out there. So do I believe the rumors? I don't know. It seems like there's a lot of smoke there. I agree with our listeners. It does seem, and they do have a lot of ties to the Saudis. Talk about the worst people you could possibly sell the company to. But hey, c'est la vie. So if you're not a fan of old school wrestling or just wrestling in general, and you want to see it go the way of the dodo, then you should probably be happy about this news because that's not going to bode well for future. We'll talk more about this on. You guys got me down a rabbit hole now. We'll talk more about this on Option Block tomorrow. So I'm sure Tusaw will have things to say, Meatball and everybody else. Let's go to Meekly $. Meekly $. Says, can I buy a call on margin? So if I see it trading for $4, can I pay $2 and finance the other half of it like I can with a stock? Thanks. All right. So Dan, Meekly $. Here. He wants to trade options like he does stock. So he sees a call, it's trading $4. Why should he pay $4 like a schmo, Dan? He wants to pay $2 and finance the rest. What do you have to say here for Meekly $?
I'm still trying to wrap my head around your soliloquy about wrestling.
You've never heard our Option Block show, have you? It's been an ongoing theme for quite some time. We're a cadre of old school 80s wrestling fans there. And so it's been a hot times over there, let's just say.
Yeah. Okay. I'll trust you. I'll trust you on that one. What was the question again?
You're just fixated on WWE. Meekly wants to know if he can buy calls on margin. So if it's trading for $4, can he buy it for $2 and finance the other half? So 50% margin like you do with a stock.
Oh yeah. No. Well, so most people can't. Most people who trade options, like if you open up Thinkorswim or whatever account and apply for options, you have what's known as regulation T margining. And that's what most people trade with, most retail traders. And no, you cannot trade those on margin for the most part. I think there may be some, exceptions where there could be a little bit of marginability with like leaps and such. Not 100% sure on there, and it depends on your broker and their clearing firm. But if you trade with retail portfolio margining, or if you're a professional trader, then you actually can, yes, but there's some pretty stringent rules in order to get that level of approval or whatever you want to say. So if you're asking that question, you don't have retail portfolio margining. So the answer for you is no.
Yeah, most of the brokers have a few barriers in place to getting. I think it's have to be like 100,000 in capital. Is that usually like the entry point, and then a few other things you have to. Every broker is a little bit different with their threshold for portfolio margin. Oh yeah, but for the lion's share of you out there, who was that meekly? You're going to buy a call if it's trading $4. They're gonna debit you the $4 right away, and that's kind of the joy and the pain of options. On the flip side, that's it. Your $4 is it. You can't lose more. You can only watch that $4 go to zero, but you can't lose 20 unless you're doing some funky ratio spread against it. So that's a nice thing, but the downside is for 99% of you out there, they're going to take that $4 right away and move it on. I blame our chat here for getting me. They know what works me up. They get me down the rabbit hole of all sorts of fun topics. Let's keep rolling here. Nichols, I've made it in the wrestling world. Yes, I have. I'm huge. Sarge loves me. So there we go. Let's go to Big John. Big John says, HNY OBC. I guess Happy New Year. Happy New Year, OBC. All right. Well, Happy New Year to you again, Big John. If you need something else, maybe I'm not down with all the cool acronyms for the kids out there. Just if as long as it's not inappropriate, let us know. He says, I'm one of the new legions and loving things so far. Oh, well, good to hear from the new legions out there. He says, what do you think will be the hot options trading strategy for the new year? The hot options trading strategy. And this has been kind of the contentious topic of late. You look back at the last couple of years, right? Look back at 2021. I mean, it's clear that was the year of the meme stock. So all things upside were hot that year. Out of the money calls and then call verticals kind of took it. People got a little bit savvier with other bullish trades, risk reversals and things. But at the end of the day, it was out of the money calls and then call spreads kind of dominated that whole year. And they worked out pretty well, at least for the first half to 2/3 of the year, really. Last year is a challenging one. I think if you look at look at the charts for last year, you might assume it was the year of the puts. And I don't want to get into that too much because we have another question about that. And maybe I'll get into a little bit more detail about puts. But last year clearly was not the year of the puts. If I had to say, and again, this is maybe a cheat because it's not really a strategy. It's more of a product category. But you have to say last year, and I was just talking with people about this again yesterday, just how transformative the zero data expiration stuff has been in SPX. It's doing 1 million contracts a day, pretty much all expiring that day, every day. It's insane. At the top 20 yesterday, all 20 of them were expiring that day. Of the top 40, only 3 were not expiring that day. So 37 of the top 40 most active contracts in SPX, which is an enormous institutional product, listeners. And if you're not familiar with it, we're all trading that same day. That means 2 things. A, retail is piling into those in mass. B, also funds, which is kind of crazy and scary. And then that C, I guess if you want to make it expand it to 3, then the use case for SPX has markedly changed. So I might have to go with last year being the year of, again, it's not really a strategy because I see people doing credit spreads there. I see people doing flies. I see people just doing straight up verticals and things. There's a lot of different use cases for zero DTE, but I think that to me, you can't escape that. So maybe I'm going to put that in the strategy/trend category. So maybe I'll expand it for you, Dan, too, as well. Do you agree last year was kind of the year of, maybe do you agree with my 2? The year 2021, the year of kind of out of the money calls, 2022, the year of zero DTE, all things zero DTE. And then what do you think for Big John is going to be the hot strategy or trend for 2023, sir?
Oh, man. I've been talking about this a lot recently. I forget if we talked about this on here, but folks, the first half of 2023 is going to feel and look a lot like all of 2022. That's my prediction. And so that said, we're going to still see a lot of the zero DTE. We should be seeing a lot of put selling, which we talked about earlier in the show. But a lot of people get freaked out when it's volatile and don't want to sell puts when it's volatile, when ironically that's like honestly probably the best time to do it. But, hey, so yeah, my prediction is what's going to work this year. All the same stuff that worked last year, at least for the first half, until we get a little bit more visibility on how things might look with, how bad the very likely recession is, or if there's going to be, what is it called? The
soft landing.
Yeah, the soft landing, or immaculate deflation. if we're going to have immaculate deflation or the more likely recession. So, but, we're not really going to we're not going to have an answer for that for a good 6 months. And when we do, then ask me for another prediction.
Yeah, it does seem like a lot of people are lining up on the first 6 months this year are going to be pretty turbulent. Look at the beginning of the year, we saw a big rally and then they erased it all in the same day, just kind of showing how much back and forth is going on around the markets. We've been rallying the last couple of days, but whether that's sustainable or not, I guess we'll find out. We have more numbers coming out this week. And again, at the end of the day, it all backs into the Fed, right? What the Fed's going to do. Again, I've said it before. I will say it again. I've never seen a more Fed-driven market in all my days of trading options here. This is a unique beast into and of itself. So if we are going to see, and it looks like we are, at least for now, going to see that similar kind of market kind of hanging around, vacillating around some levels, maybe selling off a little bit, but not blowing the doors off to the downside, then that is an environment where last year, I know a lot of people were towards the end of the year, strategy-wise, we're getting into a lot of short puts to start to nibble at some of these names that have been pretty beaten up. I know I've been utilizing that a lot. Short puts and ratio 1x2 put spreads to the downside, maybe buying one, selling two. So you're taking advantage of that extra put and the extra juice down there to pick up some underlying at some levels that you may find attractive. I think those two are probably going to be the way people are going to be leaning, because I think we are going to be vacillating a bit and maybe net trending down. That's a market you saw last year. People will think, oh, that's a market to buy puts if you're going to be net trending down. But as we saw last year, that was challenging. We have a question about puts, but we are kind of coming up against. I think we'll save that for next week. Great questions, everybody out there. Keep them coming. We love to hear from all of you guys and gals out there. All right. Mr. Daniel Passarelli III, Esquire, sir. Folks want to reach out to you to avail themselves of your legal services. Where should they go? What should they do?
Reach. You can make your way on over to markettaker.com, and that's 2 T's in a row. And for those of you who are interested in earnings trading, go over there today, because we've got this online training coming up tomorrow and an encore of it on Saturday, and it's a good little system. You should definitely check it out.
Check him out, markettaker.com. Avail of his legal services as well. Dan, cutting edge lawyer. Not many folks know that out there. Hit him up. Mm-hmm. Let him know all his legal advice. Not licensed in the state of Illinois, but who really is at the end of the day over there. Hit him up, markettaker.com is the place to go. We got to get on out of here for the live stuff. Listeners, don't worry, Brian's coming up live to tape a little bit later today, so you will have a chance to enjoy that, all you on-demand folks, coming up later on today when it hits the network, or maybe tomorrow, depending on timing out there. We're back again live tomorrow, all you folks, with your questions about WWE. Stay tuned for the option block tomorrow. I have a feeling we will touch on it there at the very least. And then after that, we'll be back live with This Week in Futures Options, breaking down all the hot action out there in the world of futures options. Back again Friday, Volatility Views, noon Central, 1 p.m. Eastern. And of course, after that, for all you pro folks, Options Oddities over there at 2 p.m. Central, 3 p.m. Eastern, if you want to get access to all that pro, including all the cool stuff we have over there on the pro podcast feed, nearly 200 hours worth of content there. TheOptionsInsider.com/pro is the place to go as we keep on rolling. Stay safe, have fun, stay profitable out there. We'll see you back here next week. Another episode of Options Boot Camp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.